G'day. It's the 18th of April, 2023. Thanks for joining me for another economic wrap, where we basically see what's happening around the world and the main financial news that has hit the wire. It's our job to make sure we're keeping up with economic news, and why not give you a little bit of an update every day if we can, for 5 to 7 minutes, just to keep you on top of your game. What are we going through today? Main themes that have hit us is ethical super funds. And if you feel like your fund is actually being ethical, I'll wow you a little bit on what some of the industry funds are doing. We're going to talk about unprofitable stocks and the risk you face when buying unprofitable businesses. And we're going to take a deep dive into a stock specifically. We're going to look at NDIS and now how the government feels like they're spending way too much money. So prepare for changes. We'll talk about electronic vehicles and how a lot of vehicles lost a government subsidy in the US, which is going to impact on their sales results, I would say. And I'm going to explain why Google lost $55 billion on Monday. So bear with me as we go through all this. Now, I just wanted to let you know that this is all just general information. If you want any personal advice, please go and speak to a licensed financial planner. And that's what we do. We are financial planners. So if you're looking for investment advice for your portfolio, reach out, schedule a chat, and we'll see what we can do. If you want to listen to the full episode and you're on the social channels, please head on over to the Real Wealth Podcast with Stefan Angelini. If you're staying on the line, thanks for listening. All right, let's look at what's happening with big super funds or industry funds. Did you know that they've got about $25 billion invested in expansionary companies that are expanding in coal, oil, and gas companies? So these are some of Australia's largest funds, which they hold a lot of power. So to go into a bit more depth, Australia's 15th largest super funds, the names like Australian Super, UniSuper, Hester, and Australian Retirement Trust, have more than $25 billion invested in companies that are expanding their coal, oil, and gas production, and organizations that have been criticized for setting up young Aussies for a worse climate future. Now, why am I bringing this up? I'm bringing this up because a lot of people think that investing with an industry fund keeps them safe, but there are a lot of people with an ethical tilt. If you have an ethical tilt and you want to make sure your funds are being invested in a 100% ethical way, you need to structure your own portfolio and invest the right way into the right companies that are properly ethical. There's a lot of things out there called greenwashing, where companies say they're investing in a green way, whereas they're not. So it's really important that if you are one of those people, to structure the portfolio the right way. And we do that for a lot of people. It's quite a minefield to navigate through, but it is possible to have a 100% ethical portfolio. Let's look at companies that are actually that trade at losses and that are traded on the stock exchange. These might be considered as growth companies. So you might buy them, even though the books don't look great. They might say that we're going to make a loss because we're going to grow our share and eventually be a super powerhouse. Amazon did this for a long time. But what you're seeing in the current environment with the cost of debt rising, less interest for people to buy shares back in these companies, they're facing a lot of headwinds and potentially may not be around for much longer. So we'll look at an example. Morningstar wrote a really good article and they looked at Zipco, for example, and they said they are scared that Zip might run out of cash before it becomes profitable. So what's happened recently is their half-year result forced them to really take a look at this company. So what they've got is they've got $78.5 million of cash on hand as of December 2022, and they've got about $360 million of undrawn debt available. Now, what Morningstar is anticipating is that companies like this may have to come back to the market and raise more equity. So what raising equity means is they come to the market and say, we need to sell more shares. We're going to give you a discount for buying our shares compared to what the market's worth, in order to get more cash into the business. So any existing shareholders, their shareholding value will be diluted because there's more shares on the market. So that they're thinking Zip will have like a $500 million equity raise in 2024 financial year. And you'll see this for a lot of these, what we call zombie companies or unprofitable companies, where they need money in the door. So they may have to look to raise equity that way. Let's look at the NDIS. So the NDIS has been talked about for years. It was introduced a few years ago, but now Labor has finally said that they think it's lost its way. So this was introduced some time ago, but let me just give you some numbers on this. So it was originally indicated or forecasted that the NDIS would have a maximum annual price tag of $25 billion. But this financial year, it's going to cost the government $35.5 billion. And forecasts estimate that if this was unchecked and not taken a look at now, that it will reach about $90 billion a year by 2032, which, 9 years away. But that's a big hit to the budget, and that's much higher than estimates suggested. There are a lot of people on the NDIS. So about 585,000 NDIS participants use it. And And 10% of these are boys aged between 5 and 7. And they think there's actually about 6,000 people joining every month. So costs will continue to rise and rise fast. So this deal, there was actually a deal based with the states. So the national government wouldn't lose too much money. So Julia Gillard struck a scheme with the states that they would share losses on a 50-50 basis. So the Commonwealth government is now actually paying about 71%, and they think that the states will chip in a little bit too. But Bill Shorten, who's actually one of the original proponents of this and introducers, says that the NDIS has now outlived the government that introduced it. Now there needs to be greater reform. So if you're in this space, watch for reforms to come, and especially, I guess, some budget measures that might be announced in the May budget. If you are one of the electronic vehicles nutters and believe this space is the way of the future, any new industry faces a lot of, let's call it legislative risk. And what's happened in the US is there was originally a $7,500 tax credit for buying specific cars or electronic vehicles. Now, the US Treasury has come out on Monday and said that Volkswagen, BMW, Nissan, Rivian, Hyundai, and Volvo cars, electric cars, will no longer be eligible for the $7,500 tax credit under new rules for battery sourcing. So what the US are trying to do is they're trying to lower the dependence on Chinese electronic vehicle battery supplies and make more people produce cars in the US. Now, this is good news still for companies such as Tesla, GM, and Ford Motor Company, who do a lot of their production in the US. Let me take you to Alphabet. So Alphabet lost $55 billion in market value on Monday after Samsung said that they're most likely going to replace Google with Bing. So it's search engine from Google to Bing. Now, this is an actual hit of around about $3 billion in revenue that Alphabet has pretty much had with no competition. And Samsung said, well, Bing has better artificial intelligence built into it, and therefore that's why we're looking at it. So could be a really big hit for Alphabet. The stock was down about 4% on the news, and that's what happens in international markets. Keeping track of this stuff, and where is your risk? Google has been an outlier and an outperformer for so long because there hasn't been competition, but it looks like competition is starting to come to the market. So thanks a lot for listening to me today. I really appreciate you taking the time. If you've got any questions, reach out to hello@angeladvisory.aus. And if you don't have any questions, go off and have a great day. Thanks for listening. Bye.